Well, hello everybody. Welcome back to another episode of Analysis Session. My name is Alexander Nikitin. I am a professional trader and a programmer as well. And today I'm going to analyze AUDCAD, Australian dollar versus Canadian dollar. Well, in this video, I will explain you the whole process of my analysis that consists of two parts. The first part is to identify what price is doing now and predict what price is most likely to do next on the higher time frame. And the second part is decide how can I get involved and execute the trade on my trading time frame. Okay, let's start from the first part. To fulfill this task, to help me in identification and prediction, I have created a fractal zones indicator. If you guys don't know what is a fractal, fractal is a high or a low that sticks out from a number of highs or lows. For example, we had a high, and before that we had some highs that are lower than this high. For example, 1, 2, 3 highs. And after that, we also had some highs that are lower than this high. In this case, this high is called a 7 candles fractal. We have 1, 2, 3, 4, 5, 6, 7 candles, and this middle high is sticking out of all of them. 3 highs to the left are lower, 3 highs to the right are lower as well. I'm using 9 fractal indicator. This means that my high is sticking out the highest from the 9. I have 4 highs that are lower on the left and 4 highs that are lower on the right. With those, it is inverse. Let me delete that stuff. And what are these rectangles? The rectangles are drawn very simple. Once we have a fractal, 9 fractal, I just draw the rectangle from the highest close to the highest low, or if it is a down fractal, I draw the rectangle from the lowest close to the lowest low. So that's it. Well, how it works? Usually when price enters into the zone, somewhere here, it bounces. We all know that prices are consolidating 70% of the time. This means that it will most likely bounce and will be channeling or trading some kind of sideways in between the two support resistance zones. Then it will break them, showing us a trending market. We know that only 30% of time price is trending. Most likely it will be consolidated. You can see it here. The zone on the above is a resistance zone, and the zone on the bottom is a support zone. See, price was consolidating in between these two lines for pretty long period of time. Okay, so I see price is moving to the downside. So my prediction is, if price goes to this downside, to this lower zone, I will be looking for some bullish opportunities. And I also understand that price may move higher. If price moves higher, I will be looking for some bearish opportunities. So the plan is very simple. If it goes lower, I will buy. If it goes higher, I will sell. Now let me switch to my trading timeframes to find some reasons for entry. And the first time frame is 4 hour. If you guys remember, last week I posted this godly pattern. Let me draw it with the help of my pattern search tool to show it. It was this. You see, blue line is the entry, a red line is the stop loss, green line is take profit. It was consolidating a bit, then it hit my entry and went to my take profit. So in this part, it already worked. I want you to pay attention to these lower lows. Lower lows. Okay, we have this low, then we have a bit lower, then we have a bit lower, and I'm expecting that we'll have a bit lower low. Let me show you something else. We have this movement, then we have a bit of the same movement, then we have a kind of same movement, and then we will most likely have the same kind of bounce if price moves to the downside. We had that downside movement, we had almost the same downside movement, and we will most likely have almost the same downside movement somewhere in this zone. It is called harmony. The market is harmonic when you can measure the movements and just predict some kind of reversal zone. Okay, let me do it some different way. I will draw the same XA as I has drawn with the Gottlieb pattern, but my B point and C point will be different. My B point is here, not this way, but here, and my C point is the highest point after that. Let me draw the pattern with my pattern search tool. Boom. You see it shows a potential butterfly pattern. A potential butterfly pattern. Let me measure these legs to show you how perfect is the completion of Fibonacci and harmonic measurements. They are almost always coincide. Okay, so my plan is if price goes lower and touches my limit order, of course I will be executed. My stop loss is my red line, my take profit is my green line. But guys, we also have an opportunity that price will never go lower, it may go higher. In this case, I have another setup. Let me draw it this way. This would be my X to A leg, this will be my A to B leg, and this is my A to C leg. If I run my pattern search tool, it will find some patterns. You see, if price goes higher, we will have a cipher pattern completed, for example, like that. In this case, it is very good to sell on the resistance zones from the daily time frame. So two opportunities for you. Either a butterfly pattern if price goes to the downside, or a cipher pattern if price goes to the upside. Well, that's it for today. Hope you liked that video. If so, please give me your thumbs up. Share this video on social media. Follow me on TradingView on Facebook and on YouTube as well. Until then, good luck. Have a happy Thursday.